CryptoCast Daily is here, sharp, short, and to the point. Subscribe now and never miss a market move. Here are the top highlights shaping the crypto market today. Bitcoin ETF inflows reverse as Fed's hawkish outlook triggers market caution. BTC, XRP, SOL, DOGE resume slow grind higher after Fed, dollar index is resilient too. Ripple, Franklin Templeton and DBS to offer token lending and trading. Asia Morning Briefing, Bittensor's dTAO shows a retail path to AI exposure beyond Robinhood's SPVs. SEC makes spot crypto ETF listing process easier, approves Grayscale's large-cap crypto fund. First US XRP ETF launches Sept, 18, CME to list options on XRP futures October 13. Crypto platform Bullish's second quarter earnings beats Wall Street's estimates. Crypto exchange Kraken sees handful of senior execs depart. Source: Fed cuts rate in risk management, move as Bitcoin eyes possible upside. Now is the time for active management in digital assets. Why we need more stablecoins. MoneyGram makes stablecoins the backbone of its next generation app. Democrats in Congress call foul on status of Trump's crypto czar David Sachs. Curve Finance pitches yield basis, a $60 million plan to turn CRV into an income asset. Stellar's XLM rebounds from 38-cent lows as institutional demand fuels recovery. HBAR retreats amid constrained range trading and diminishing volumes. The protocol, ETH exit queue gridlocks as validators pile up. Bullish shares rise 5% ahead of earnings after crypto exchange secures New York bit license. BNB price jumps on report Binance is nearing a DOGE deal to end compliance monitoring. Analyst predicts, October, rally for Bitcoin regardless of Fed's FOMC decision. Stay tuned as we break down the details behind these headlines. Spot Bitcoin exchange traded funds saw their first daily outflows in over a week.
Investors reacted to the Federal Reserve's unexpectedly cautious outlook on future policy.
The outflow broke a 7-day streak that had brought in nearly $3 billion.
Assets under management remain above $150 billion according to SOSO value data.
The Federal Reserve lowered its benchmark rate by 25 basis points.
This brings it to a range of 4.00% to 4.25%.
This is its first cut of the year.
The real surprise came from the central bank's updated projections, which indicated just 2 more cuts in 2025.
Bitcoin, the leading cryptocurrency, topped $117,900, its highest level since August 17.
This follows the Federal Reserve cutting rates by 25 basis points to 4%.
The central bank also hinted at rapid easing in the next 12 months.
Bitcoin is up nearly 1% on a 24-hour basis.
Ethereum is up 2.7%, but remains within a 4-week-long price range.
Other major cryptocurrencies like Dogecoin, Solana, and BNB are up over 4%.
XRP traded nearly 3% higher.
Solana briefly topped $245 as Chicago Mercantile Exchange will offer Solana options starting October 13.
Franklin Templeton, DBS, and Ripple have partnered to offer new trading and lending solutions.
They will leverage tokenized money market funds on the XRP Ledger blockchain and Ripple USD.
Franklin Templeton will tokenize its money market fund on the XRP Ledger.
DBS Digital Exchange will list the tokenized fund alongside Ripple USD.
This allows DBS clients to rebalance portfolios between a stablecoin and a yield-generating fund.
Investors can earn yield even during volatile market periods.
Ripple executive Nigel Kaku called this collaboration a game-changer.
He highlighted the movement of traditional financial institutions onto the blockchain.
Bittensor offers retail investors a path to artificial intelligence exposure.
This contrasts with Robinhood's earlier attempt, which faced legal challenges.
Bittensor's decentralized artificial intelligence network introduced the dynamic DAO upgrade.
This upgrade aims to make staking similar to venture capital.
DAO holders allocate to subnets with on-chain artificial intelligence startups.
They receive alpha tokens reflecting subnet performance.
This creates a market-driven incubator rewarding value creation.
2 key subnets highlight the importance of this system.
The Securities and Exchange Commission approved new rules for listing spot cryptocurrency exchange-traded products.
These rules allow exchanges to list these products without individual review by the agency each time.
This streamlines the process and bypasses the lengthy rule filing that could take up to 240 days.
Exchanges can now list exchange-traded funds if the proposed strategy meets the generic listing standard.
Securities and Exchange Commission Chairman Paul Atkins said this aims to reduce barriers to digital assets.
He stated that this ensures United States capital markets remain the best place for digital asset innovation.
The agency also approved the Grayscale Digital Large Cap Fund, which tracks the CoinDesk 5 index.
This fund currently consists of Bitcoin, Ether, XRP, Solana, and Cardano.
XRP is gaining attention in traditional finance as new securities and derivatives products broaden access to the token.
XRP recently traded around $3.02, down about 1% over 24 hours.
On September 18, Rex Shares and Osprey Funds will launch the first United States-listed exchange-traded funds tied to XRP and Dogecoin on the CBOEBZX exchange.
These exchange-traded funds, under the tickers XRPR and DOGE, are not pure spot funds.
Bloomberg intelligence analyst James Seifert noted that the funds will hold XRP and Dogecoin directly.
They will also invest in other spot exchange-traded funds outside the United States.
Filings allow for derivatives use if needed, but this is not the primary strategy.
This marks the first time American brokerage accounts will have access to XRP and Dogecoin-focused exchange-traded funds.
Bullish, owner of CoinDesk, exceeded anticipated earnings per share and projects increased adjusted earnings before interest, taxes, depreciation, and amortization for next quarter.
The crypto platform reported earnings per share of $0.93 in the second quarter.
This surpasses the average analyst estimate of $0.03, according to FactSet data.
Bullish reported adjusted revenue of $57 million for the second quarter, compared to an estimated $60.7 million.
Chief Executive Officer Tom Farley stated Bullish saw exciting liquidity services growth and executed a successful consensus conference.
He added that they are seeing strong business momentum in the third quarter.
The firm is projecting between $25 million and $28 million in adjusted earnings before interest, taxes, depreciation, and amortization for the third quarter.
This is a substantial increase from $8.1 million in the second quarter.
Kraken has seen 4 senior executives depart from its institutional business.
These departures come as the cryptocurrency exchange prepares for a potential United States public listing.
The departing executives include David Olson, Shannon Curtis, Jeff Kramer, and Sanjay K.
Their roles spanned institutional sales, product management, and over-the-counter trading.
Kraken declined to comment on these departures.
The executives also did not respond to requests for comment.
Kraken reportedly reduced its workforce ahead of a planned listing in the first quarter of 2026.
Kraken's second quarter income in 2025 was lower than the same period in 2024.
The Federal Reserve cut its benchmark interest rate by 25 basis points to a range of 4% to 4.25%.
The Federal Reserve acknowledged that economic growth has moderated and the job market has slowed.
He also stated there was not widespread support for a larger cut.
This decision follows signs of a weakening United States labor market, including the August employment report showing only 22,000 jobs added.
Stablecoins have become essential in the crypto world.
They have facilitated trillions of dollars in transactions since 2019.
Stablecoins offer a way to hold value on the blockchain without worrying about price fluctuations.
This makes them ideal for storing and transacting within the crypto economy.
Recent legislation in the United States has clarified regulations around stablecoins.
This has led to a surge of companies launching their own stablecoins.
MetaMask, Stripe, and Circle are among the companies entering the stablecoin market.
Traditional finance firms are also investing heavily in crypto companies involved with stablecoins.
MoneyGram is integrating United States dollar-pegged stablecoins and blockchain technology into its mobile application.
Colombian users will be the first to utilize the app for receiving and storing stablecoin payments.
MoneyGram plans to expand this feature to other markets soon.
Colombia is a key remittance market, making it an ideal starting point.
MoneyGram Chief Executive Officer Anthony Suhu compared stablecoins to groundbreaking technologies like spreadsheets and web browsers.
He believes stablecoins are a pivotal application for cryptocurrency.
The app utilizes Circle United States Dollar Coin, Stellar Blockchain, and Crossmint.
MoneyGram has a vast global network for cash pickup and money transfer services.
David Sachs, President Trump's crypto advisor, is working under a special government employee status.
This status is intended for officials serving temporary duties.
Senator Elizabeth Warren and other Democrats question if he has overstayed this temporary role.
The law limits such employment to 130 days per year.
A letter to Sachs asks him to report his total days worked for President Trump in this capacity.
If he worked every business day since January 20, his 130th day would have been July 25, 2025.
Lawmakers are investigating this timeline.
They argue exceeding the 130-day limit undermines the intended balance of the special government employee designation.
Stellar lumens rebounded above $0.39 during European trading hours on Tuesday.
This followed a sharp dip to $0.38, marking the session's steepest decline.
Elevated trading activity around $0.38 signaled strong demand.
This established that zone as a key support area.
The bounce gained momentum as European markets opened.
Analysts noted this recovery suggested institutional interest.
Traders were likely accumulating at discounted prices.
Stellar lumens remained within a narrow $0.38 to $0.39 band over 24 hours. Hedera Hashgraph's HBAR token traded in a narrow range between $0.23 and $0.24 over the past 23 hours.
This represents only 2% volatility and suggests a period of consolidation.
The token briefly reached $0.24 on September 16 but slid lower, finding support around $0.23.
Despite several rebound attempts on September 17, buying conviction remained limited.
Trading volume decreased steadily following an initial spike, indicating weakening market participation.
This reinforces the impression of indecision among traders.
A sudden sell-off occurred at 13:33 UTC on September 17, pushing HBAR down to $0.23.
However, the token recovered to close near session highs, demonstrating some resilience. Ethereum is facing a validator bottleneck with 2.5 million ETH awaiting exit.
This backlog has pushed exit wait times to over 46 days.
This is the longest wait time in Ethereum's short staking history.
A large infrastructure provider, Kiln, chose to exit all its validators as a safety precaution.
Layer 2 networks like Arbitrum and Base are experiencing significant growth.
This raises the question of whether Layer 2s are impacting Ethereum as Layer 1 DeFi activity.
The Ethereum Foundation has started a new artificial intelligence team.
This team aims to make Ethereum the central layer for the machine economy.
Bullish shares rose 5% to $53.12 on Tuesday.
This increase followed the crypto platform securing a BIT license from the New York State Department of Financial Services.
This crucial regulatory approval allows Bullish to offer spot trading and custody services to institutional clients in New York.
With this license, Bullish United States Operations Limited Liability Company can now legally serve advanced traders in New York.
This is an important step in the company's push to expand domestically.
The license comes just a day after Cathie Wood as ARK Invest significantly increased its exposure to the company.
Bullish will report second quarter earnings after markets close on Wednesday.
Investment bank Keefe, Bruyette & Woods initiated coverage on the company with a market perform rating and a $55 price target.
Binance is nearing a deal with the United States Department of Justice to end a key compliance requirement.
This follows a 2023 settlement related to anti-money transmitting violations.
The price of Binance Coin rose nearly 3% following the news.
Binance Coin was recently trading near $950.
The Department of Justice has not made a final decision.
If finalized, the deal would require Binance to adopt stricter internal reporting systems.
Binance Coin reached a high of $963 in today's trading session.
The wider crypto market is awaiting the Federal Reserve interest rate decision.
Bitcoin is currently trading above a key support level at approximately $116,000.
Analysts are predicting a potential rally for Bitcoin in October, regardless of the Federal Reserve policy announcement.
One analyst noted that Bitcoin has compressed more than other assets like the Standard & Poor's 500 and gold.
This compression suggests Bitcoin may lead the next major market move.
Another analyst highlighted Bitcoin's historical performance after September Federal Open Market Committee meetings.
Since 2020, except for the 2022 bear market, Bitcoin has rallied following these September meetings.
This pattern is attributed more to seasonal dynamics than the Federal Reserve's rate decisions.
Technical analysis indicates Bitcoin remains firm above the $116,000 mark, with support around $116,400 and resistance near $117,300.
That's a wrap on this episode of CryptoCast Daily. Thanks for tuning in. We'll catch you next time with more market updates, bold predictions, and fearless crypto insights.